got someone whom I enjoy on Twitter more than anyone, really, because he speaks the truth. But fortunately, he's made people a fortune on Tesla, and he is coming public today, Mr. Gerber.
Hey, thank you, Jim. It's an honor to be here with you. I've been a fan since the old days.
How did you know that Tesla was the right thing? Because it's really extraordinary how you were identified it so early on.
Well, first of all, when I got the Model S, when it first came out, I was like, this is a great car, and it's electric. But really, when things were tough for Tesla, I went to the factory, and I saw what they were doing, and there was such a huge difference between reality and what everybody thought. So we invested more, and Elon pulled it off, really.
Well, you sure did. Now, tell us about what you're celebrating today, Ross, because I think it's very exciting for you.
Yeah, well, we launched our first public ETF, and it's symbol GK, and we did it because we have such demand for our financial planning services. We wanted to make it available to everybody, especially because so many young people are trading on platforms now, whether it be Robinhood or Webull or whatever. So we wanted to give people a core growth vehicle around all their speculations and whatever, because so many young people don't understand the importance of having that core growth portfolio.
Well, anyway, I want to wish you luck. And I sure hope younger people do listen, because this is a person who's very much about democracy, but very much about doing it right. And you got to have both. You got to have both.
Absolutely.
Best of luck.
Thank you, Jim.
Appreciate
it.
Of course.
Let's look ahead to next week. Now, second quarter earnings season is going to officially kick off with many of the major banks reporting. You talked a little bit about Wells Fargo, JP Morgan, Goldman Sachs earlier on this show. We own Wells Fargo for the charitable trust. Now, what are you looking at specifically when the banks report? What do you want to hear?
Well, I want to hear loan growth. I mean, the American balance sheet's so solid that there hasn't been a lot of loan growth. I want to hear, of course, net interest margin, because people are totally hung up on that. I want to hear about, are there any bad loans? I think the bad loans continue to go down. But I increasingly want to hear what services and fees they are providing that are sticky enough that they just are built-in money. Because I think what has to happen is they have to become much more efficient, like the rails did. And the more efficient they get, the bigger the profits. And then maybe the focus won't be so much on net interest margin. I do think the rates have to go higher at a certain point, but let's not forget that some of where rates are controlled by the market. And when you look around the world with countries that have a lot of money, like Germany, they're not being a very good fiduciary if they buy German bonds.
Now, you mentioned bad loans going down, and I'm reminded of this time last year when everyone was kind of concerned about how much loans that the banks had on their balance sheets tied to energy companies. But with oil as high as it is, that has to be a positive sign that those companies can pay back their loans.
Absolutely, and Wells Fargo, on a percentage basis of their book, is the predominant oil lender. They bought a lot of, actually at the top previous regime, but now they're coming back. So I suspect we'll get some positive commentary from Charlie Scharf, the CEO of Wells. I think his efficiency ratio is going to be much better too.
Let's move on to Boeing. Now, there was a report that came out late in the trading day yesterday that said China, they may be willing to do test flights for the Boeing 737 MAX, which still hasn't been recertified in the region yet, but this would obviously be a big step towards that progress. Now, Boeing has said previously that they're looking for a second half 2021 recertification timeline in China, but you still urge some caution on Twitter. Why is that?
Reasons. One is that I think the quarter's going to be bad. There's no reason to think it's going to be good. Remember, they didn't win a lot of orders. Second, I look at the balance sheet and think if I were the new CFO, maybe I want to do an equity offering. And if they did that, that would be a great time to buy. And finally, since when is China doing anything for us? This regime, I mean, President Xi has the ability to say, you know what, I don't want the MAX. I think it's an unsafe plane. I think we seem to be very naive about President Xi's goal here. I mean, it's not much different from an Iron Curtain, and what I would not necessarily compare him to Stalin. I did that yesterday. It is a little more like Mao, Khrushchev. They didn't want to do a lot of business with the United States, and they succeeded in not doing a lot of business with the United States. That's, I think, a precept of Xi. He doesn't want to do a lot of business with us because that helps us. He doesn't want to help us.
Yesterday there was a report out that the White House was targeting the railroads with some of their pricing, and now they're also going after big tech, going after their data collection, anti-competitive practice. What do you think about all this regulation that's coming after some of these companies?
Very anti-business presidency. far more than Obama. Obama initially was anti-business, but then came to make peace with business and just chose not to focus on it, frankly. Had an agenda and then realized this agenda was not going to get through after the initial first 2 years. Look, I'm mystified by President Biden. He's using a shotgun when he should use a rifle. Maybe KSU shouldn't merge with Canadian Nat. Maybe there are companies that are unregulated in the banking business that should be regulated. But the idea, and maybe that you should have people in the FTC and in antitrust who are very rigorous, and if a deal's not going to be like T-Mobile, which it lowered prices, maybe it should be stopped. But just saying, listen, we need to be tougher on business, that seems to be pandering to people who are upset with big business and feel like it got too big a deal, good deal under President Trump.
Let's look at it through the lens of Amazon. Now, part of this executive order, they want to keep prices down for families, but they also want to boost wages at the same time. And when I think about Amazon in the pandemic, they went on a hiring spree. And whenever Amazon raises their minimum wage, they often force other companies to follow suit. So why Amazon? Why is this just such a big target?
Well, look, I think that both Republicans and Democrats don't like Amazon, and they don't like it because it's put a lot of companies out of business. A lot of mom and pops were destroyed by Amazon, but a lot of mom and pops were destroyed by Walmart. And I get concerned when we have companies that the average person loves that are under attack by Washington, when there's so many other causes that they should be addressing. When you attack a company like Amazon that has lowered prices dramatically for you, I say shame on government. The government's just barking up the wrong tree. I think the president is going to have to get a little more sophisticated about the way business works. I know that's a loaded term to use the term sophistication. It implies that he's dumb. He's not. But business works in a particular way, and he seems to be tone deaf about it.
Let's talk about what Pfizer's doing real quick before we start talking about some of the executive orders that just are coming out from the White House. Now, Pfizer, they announced yesterday they are working on a booster shot, a third shot that could potentially target the Delta variant. And we're also hearing news from Merck that they're developing an antiviral as well that is going well. So what do you think about these two pharma companies?
Merck has got a small trial. The antiviral is perhaps the most important thing you can have. Because one of the things that we need is to be like Tamiflu. You get sick, you get better. That's what we really want. Right now, it's either you don't get it or you do, and if you do, you're damned, and if you don't, you're okay. I think that so that's very, very important. Pfizer, there's a lot of dispute about whether you need a booster. Most of the good doctors I talked to say you don't, but in Israel they said that people who have been vaccinated 5-6 months ago who are senior citizens need a booster. So some people might think that Pfizer is being greedy, but if you follow the Israeli data, and remember, and that's just a small sample, the Israeli data says that you need a booster if you're in a higher risk category. I read these things and said, bring the booster on. I want a booster. I mean, why not? I mean, one of the things that I really disdain about the people who don't get it is that they might be people who get the flu vaccine. And now Dr. Topol came on Mad Money last night and said the FDA, by keeping this as an emergency vaccine instead of an approved vaccine, has made it so it's very difficult for companies to compel people to take it. Once it is an approved vaccine and not emergency, legally they can say, you got to take it or you're fired.
Now, Pfizer and Moderna, they've done such great work developing these highly effective COVID-19 vaccines. But if you look at the difference in the stocks, they've been completely different. Moderna has been a very strong performer. Meanwhile, Pfizer, it's just stuck in the mud. What do you think Pfizer needs to do to change that?
Pfizer's got a very bad patent cliff. So Pfizer has to buy someone. I posited they should buy Biohaven, because Biohaven is an independent stock that happens to have the world's best migraine drug, and there's 30 million people who suffer from migraine in our country alone. Meanwhile, that stock just keeps it's doubled since I've been saying that. Pfizer is a well-run machine, but does not have the innovation that we would like to see. They need to buy. They need to buy someone. Moderna is working with Merck on personalized cancer vaccines. And that could be explosive.
Let's turn our attention back to the broader market. Now, obviously, a lot of selling yesterday. You talked about last night on the show that the Delta variant had a major role in that, and the canceling of the Olympics, or excuse me, spectators at the Olympics played a role too.
The futures dropped dramatically when that happened, because what that said was, oh man, maybe the variant's bad. And then I do some work. How could it be that only 15% of Japan is vaccinated? I mean, Japan is an advanced nation. That's a travesty. China, by the way, the Chinese cut the reserve rate. Why did they do that? Well, the China vaccine doesn't work. Or it works like our flu vaccine, where we know that it prevents some, but not all. I mean, these are countries, China's too proud to maybe use Moderna. I think they'll partner with the partner that Pfizer has in Germany. That's why that stock's going up. But, we've got an economy here where we're, with the exception of certain parts of the country that are, fortunately or unfortunately, linked with who voted for Trump. You've got a country that's done the vaccination since Biden came in very, very well, and that's good for business, even as he seems to be bent on hurting business.
I want to first turn our attention to your real money column from this morning. You talked about the state of the economy and the recovery, and you didn't describe it as a U or an L or a V. Rather, it was a check mark. Yeah. So what makes you think a check mark recovery in the economy?
Like Levi Strauss, okay, this morning I had Chip Berg on, and Chip Berg's a friend of the show. We've been to his factory, and the best factory that he has. And one of the things that's incredible to me is his numbers are way over 2019. So a check means your numbers are way over 2019. Costco. Fabulous numbers last night. And one of our companies that we've been through thick and thin with Costco, we're up probably, I don't know, maybe 100 points if you include the dividend.
Yeah, the special div.
Right. Yeah. So, again, what you're seeing are companies that we're not ready. One of the things that I know there's supply chain problems everywhere, but that's because of the check. No one expected things to go. There was the L, where people said the economy's going to flatline. That was long-term COVID. Then there was the U, where people said, you know what, there's enough stimulus that maybe the economy can come back. And then there was the V, where we saw the economy coming back. And now there's the check, because the economy's on fire. And rates are low. Home builders doing great. The whole retail supply chain is out of whack because the sales are so incredible. We've got the child credit coming, and we can talk about how yesterday American Eagle Outfitters. But what we're seeing basically is an economy that's far better than 2019. Now, 2019, if you recall, we had 3.5% unemployment. We've got much higher unemployment now, but we have much more stimulus now. I still believe that we are going to see more people come into the workforce when it's advantageous to not keep trying to get. I want people to understand, when let's say you run a restaurant like we do, 7 people might say that they're going to come in and interview. 1 shows, and 1 turns you down because you're not offering enough money, and we're offering $18 an hour. It's not enough.
Now, does pent-up demand have a role to play too? And I know just people willing to spend after the pandemic. I know with Chip Berg and Levi's, they said 35% of the people changed waist sizes since the pandemic. That's fascinating.
That's why you want to own American Eagle Outfitters, because you've got young people who have not changed their wardrobe. They're flocking to the mall. Notice Simon Property Group doing quite well. And I think American Eagle Outfitters, I'm not being hyperbolic when I say it could run 15 points here. Well, after what I heard what Chip Berg said. 15, not 5. 1-5.
I want to go back to FANG for a minute and specifically talk about Amazon and Microsoft. Now, yesterday, the big news, that Amazon was one of the top performers yesterday, and it perked up even higher yesterday in the afternoon when the Pentagon announced that they would be pulling back from their $10 billion JEDI contract with Microsoft. Instead, they're going to pursue perhaps a split deal between the 2 companies. Now, these are both long-time Action Alerts Plus names. So what do you think about this contract? Is this just a non-story or something more?
No, I don't think it's a non-story. I think that that Amazon Web Services has endeavored to cut price endlessly and improve speed endlessly. When you speak with people off the desk about what is the most superior product, there's no one that I talk to who says Azure from Microsoft is. But Microsoft's integrated in so much of your life that it's easier sometimes to deal with Azure. And not everyone is interested in funding Amazon. If you're Walmart, you hate Amazon. One of the problems we have with our Walmart position is that Amazon was eviscerating them. So you have to understand that there are plenty of companies that don't want to deal with Amazon and they go to Azure. because you're funding the enemy.
Right, and you don't want to give away all of your data as well that they would be computing under their cloud businesses.
You're a drug company. If you're dealing with Amazon, you're an idiot. Amazon wants your data. Now, Amazon Web Services say, listen, they can keep the data private, make some deal with Amazon. But what matters is that Amazon is offering the best value proposition. I don't know a soul. I mean, I would love to hear Satya tell me why it's cheaper. Maybe it's cheaper as part of working with Microsoft. I don't know about you. I'm on the Microsoft operating system, and they've been doing endless updates for PCs, and I think they all suck. I mean, even the one where they complete the sentence for you, artificial intelligence, they suck because we don't want. I mean, if you ask me whether I would want it, I'd say no. But we don't have a choice, and it's offensive. I find it offensive what Microsoft's doing.
All right, well, let's go back to Didi. Didi from yesterday, it's down again big today. Now, you've long railed against Chinese IPOs, and yesterday you said on Real Money that perhaps this was the last straw and that maybe you cannot touch these things.
Now, let's talk VIG for a second. Anything can be sold by Wall Street. So we don't think that there should be another Chinese deal, but there will be, because they will cut the price so big that that someone in America, a broker, is going to take that and call people and say, listen, we have assurances that this is not going to be a Didi. So that stuff happens because people are idiots. You should not buy anything from China. Didi was the last. I mean, Didi had so many great prospects. I mean, 500 million. They're going to go to 1.3. It was in the wallet. It was everywhere. It was perfect, and it completely, and they stonked you. So I feel very strongly that you beware of China deals. They're coming. No one's going to cancel. The greed is too big. It's 30 deals. Wall Street's way too greedy to not let these deals come. But they're going to take you, rip your heart out. 20%. There's a huge percentage of the companies that have come public from China this year that are down substantially from where they were offered. So be aware. Don't be a fool.
Now, while money has been coming out of these China stocks, especially yesterday, Didi, Alibaba was down big yesterday, you did tweet that we are seeing some nice moves in some U.S. companies that do have strong operations in China. Apple, Starbucks, Nike, just to name a few. Why do you think that's the case?
I think that those are for China, by China, for China. In other words, Nike has a lot of employees there. Starbucks has a lot of employees. Apple plays ball with the government. And there is a move out of Chinese stocks into those three stocks. We made money with Nike, but obviously it wasn't stopping. We made money with Starbucks. I now question whether we should have necessarily sold our Starbucks, if only just because they seem to be anointed as the way to play China now that they've ripped our hearts out with the usual Chinese stocks.
Right. Is that also maybe it's a way to say, all right, you might have some money managers say you got to get invested, you have to get exposure to China. But I mean, if you look at a lot of U.S. companies, there are many U.S. companies that do a lot of business there. Broadcom is another example, a lot of semi companies too. So if you are saying that, okay, we don't want to invest in China, then spit up the stocks that do a lot of business there, because that's where you can get your exposure to the consumer.
Now, we used to think it was Boeing. I think Boeing needs to do an equity offering. I think that's what I'm waiting for. I think Boeing's quarter's been bad. I know people say, hey, listen, Jim's saying buy Boeing. I just said the quarter's bad, and I think there could be an equity offering. So I want to put to rest, we own Boeing, and we have to own Boeing, because Boeing is going to be a duopoly where travel's going to be immense once the reopening, once the Delta is cured, and it will be. So you want to own Boeing, but be aware that the next few weeks, when they go right up to the quarter, it's going to be bad.
And that's with the new CFO who just came in place as well.
The old CFO promised you there was no equity offering. He's gone. So the new CFO has the ability to be able to do a giant equity offering without, violating what Greg Smith said. He's gone.
Before we wrap the show up, I do want to highlight the section that you had at towards your top on Mad Money last night. You highlighted that when the market sells off, there's basically three types of stocks that you want to look for when the market's on sale. That's the ones that are strong, acting strong that day. They're battle tested. Ones that are just terrific stocks that are working, and you finally get that pullback you've been waiting for.
And they're coming back.
And the third category was stocks that had a specific catalyst that day that perhaps got brought down by the broader weakness, and that was AXP off that upgrade yesterday.
Well. as now we forget why it didn't work. We recognize that America's Best was pulled down by the bank stocks, which are coming back slightly. They're at low levels. I mean, Goldman's back to 366. I know we have to look at these stocks, but I would say that 10-year does overhang. That's a sort of Damocles coming down on these guys.
Oh, yeah, and absolutely. And we're going to have the banks report next week as well. So it is going to be very interesting to hear what the CEOs have to say about net interest income for the rest of the year.
If it was going toward 1.75 to 2, the conference calls were going to go a lot better.
And they did also, a few CEOs, they pre-announced some down capital markets revenue as well a couple weeks ago.
I already told you, not so great. We own Wells. I would even buy more Wells. Wells is a turnaround story, not a net interest margin story.
Right.
And Charlie Sharp is turning that company around.
Right. Specific catalysts there, and also they had some nice capital returns that they announced not too long ago. Let's say I'm a new investor, and there's a lot of new investors that have come into the market recently. Yesterday, we're right around all-time highs. Now today, it's just a little bit uglier of action. So what piece of advice would you give to newer investors when they do see the market down this much this morning?
Well, I think that they should recognize that there is a powerful force of interest rates being very low. They've declined dramatically. So suddenly there's a whole new group of stocks they can look at, the 3% yielders and the consumer packaged goods stocks that are doing well. So you take a PepsiCo, good yielder, very well run, should have very good numbers. And we don't own it for the trust, but that's the kind of stock that if you wanted to get your feet wet, and I do feel like I was hoping it would come down, but if you wanted to get your feet wet or watch, that's the kind of stock that you should be interested in. That's going to work. Same thing with Clorox, by the way, although Clorox is not as doing as well as PepsiCo.
Let's hit on oil now. Oil down for the third straight day. You could call it fears about demand, because we are seeing, with yields fall, people are just concerned about global economic growth. And there's also OPEC right now, who can't come to an agreement over supply. So just with oil down, what do you think what are the effects to some popular names in energy, such as Devon Energy, Chevron, Pioneer?
Chevron is the one I'd focus on. Chevron's a 5.25% yielder. The dividend is safe. The company's done a lot of things right. Mike Wirth is a great steward of capital. That's the one to buy because they're not spending beyond their means. I also like Devon, which has a variable yield that's very high. And Devon, again, is probably the most capital disciplined company. So I would go after those two.
And oil, the possibility of oil reaching $100 per barrel, that was one of the 7 themes that you outlined last night on Mad Money.
The reason I say that is because the Permian, they really have, they're still cutting production. Iran, not on. Saudis, it was kind of a half. They were a little, they didn't do enough to be able to keep, they seem to they're happy to have oil go higher. Russia's happy to have oil go higher. Economies are turning around. We have this momentary blip with Delta, but people are traveling again. And I really think that there's a shortage of oil versus demand.
So you think part of the reason is that a lot of these oil companies, a lot of their stocks are doing much better, much better, much higher prices than what they were prior to the pandemic. So are they recognizing that if they don't just try and get as much market share as they can, and they let oil prices go higher, it's better for the stock price?
Yes. People must read Rick Muncrief's statements at the beginning of the Devon conference call, his last conference call for the quarter. It's devastating. He attacks the industry for being foolhardy and talks about his philosophy. Read it, because you'll understand. He is a leader. He's a thought leader in the group. Remember, WPX merged with Devon. He became the CEO. Everything you need to know about what's happening right now in the Permian is encapsulated in that conference call.
Let's move on to some Reddit trades. You've been really focused on one over the last couple of days. This Newegg up about 150% yesterday. I did see it was coming down a bit today. You called this a BGL. Can you explain what that acronym is and any message to the Reddit traders today?
Here's what you have to be aware of. There are stocks. I tried to expose this at TheStreet. Okay, there are stocks where first they're bagged, meaning you get in as much as you can. Then you gun them. Again, I expose this in TheStreet, meaning you say good things that are going to happen, okay, there. And then into the frenzy, you liquidate your position. Like, you had to do that yesterday because this Newegg went up. Newegg, by the way, is a company that says it's like Best Buy. It says it's the number 2 Best Buy. And you BGL, you bag them, you gun them, and you liquidate them. Now, that's very different from what was going on at AMC and GameStop. Those were situations where people bought and hold, and I like buy and hold. If AMC's playing offense, Adam Aaron, GameStop are waiting for Ryan Cohen's edicts. But what I would point out is that the meme people don't have enough capital to keep up GameStop, AMC, and there are other new ones that they're doing. And so there's weakness in it because they're funding these new ones to bag, gun, and liquidate from AMC and GameStop. So the memesters have to recognize they need more money in. They have to start campaigning for money. They have to try to get Robinhood mind share. They have to do fundraise. They have to explain to people how well they're doing, or otherwise they're going to run out of money. Now, so my advice to the memesters is, many of whom just do nothing but attack me and say, well, listen, you like Didi, whatever. I got screwed by President Xi. I could get a T-shirt. Screwed by President Xi. How do you feel like that? They keep saying I'm irrelevant, and I think it's hilarious. What's irrelevant is the SEC. Now, and the reason I say that is because if I'm so relevant, why are they all following every word that I say? And the answer is, sheep. Okay? I endorse GameStop. I like Adam Aaron. I see when stocks are going lower, but don't be a sheep. Don't be drawn to the bag 'em, gun 'em, liquidate. This I'm speaking directly to the 10 million people who are playing this, because I don't want them to lose money. I want to know who's protecting you, not the SEC, not the chief of memes, not the Sith Lord, but it's me, and they hate me for that. Fine.
So you want to make sure people don't get burned quickly on these trades.
I'm trying to expose this stuff. I started TheStreet.com 26 years ago to expose this kind of behavior, and when I know when I see it because I've been doing nothing but expose it for years, and I know that the New York Stock Exchange has used my stuff to be able to detect this, and I'm sure they're using it again.
The blog post you had for Real Money today, you talked about a Wall Street Journal article about what's happening in Ketchum, Idaho, and how there's plenty of jobs available, but unfortunately, housing has become too unaffordable for the many. What does this say about the U.S. economy right now?
What it says is that the companies that are there, that are profiting, need to pay much more to their employees so they can live within some distance of Ketchum, but also an understanding of something that we've never seen before, which is that the mobility of rich people. When rich people are able to have hybrid, they go and they move to great places. And those great places are meant to be vacation places. They're not meant to be full-time residents. So now we have full-time residences coming on, hybrid people. And what do they expect? I mean, when you take a town that was meant for 1,000 people and suddenly you make it 10,000, you're going to have problems like we had in Williston, North Dakota, where you ended up having man camps, literally man camps to put people. And this is a man camp situation.
That's hit Alphabet, a new antitrust lawsuit against them, 36 states and the District of Columbia. Now, this is the 4th antitrust lawsuit brought against Google Alphabet since last October. This one is geared more towards the Android App Store.
Yeah,
anything new here? Anything?
That was like, they want to check. They just want they want Alphabet to settle. I thought it was flimsy. The lawsuit should have been brought because they say that we're suing Alphabet because it's too big. I mean, that's what this is, and that's the price for success in this country. Democrats and Republicans are united against the companies that America most love: Apple, Alphabet, Facebook, Amazon. These are the companies we love, and yet because they're so powerful, our Congress is against it. In the same way that because Alibaba is so powerful in China, President Xi's against it. This is an attack on the rich, and I don't like it. I don't like it, and I think that it's wrong. These people created great companies. I hope that they do what Jeff Bezos' ex-wife does, which is give away the money wisely. But I saw Steve Ballmer join the $100 billion club. He used to sit next to me. I work with him at college. God love him. That's terrific. But you got to give money away because you're so rich and fortunate. You've got to help others.